So traders, I'd like to welcome you to today's webinar presentation. On behalf of Tickblaze, my name is Sean Kozak. I'm the CEO. I'm also head of system and design. I work with all the developers and the R&D teams for programming algorithmic trading systems, strategies, signal generated systems, anything that touches a chart and traders, I have an oversight in. And I like to do these webinars because our goal with the Tickblaze marketplace is to be able to provide apps, algos, and strategies for traders so that you can become essentially just more profitable. I mean, at the end of the day, we build tools so traders can become great traders and make as much money as possible. Okay. Now, this product, this webinar, and this entire focus today has been something that we've been working on for some time now. And essentially, the goal for automation is to keep things super simple. But what ends up happening is trying to create profitability with a strategy is a different discussion, right? Now, there's a big difference between day trading, swing trading, intraday swing trading, momentum trading, scalping, trend trading, breakouts. One of the biggest things that happens in the market every single day is the market moves, right? Doesn't matter where it goes, whether it's a short move or a long move, the market moves. And normally what that means is there's momentum behind price. What we've done is we've built a momentum scalping algorithm. Okay, now what this means is we're looking for base hits. We're not looking for big trend trades. We're looking to take lots of scalps. Who in here is a scalper or an active day trader? Type a yes. If you are an active day trader, you like to take fairly decent amount of trades. You like to take short base hits, get in, get out, make as much money in as little time as possible. I want to know if that is your mandate. Is that who you guys are? Yes or no? Okay. And the reason I'm asking this is because not all strategies are meant for everybody. And if you're an active scalper and an active day trader, this system is absolutely you're going to love it. You're just going to absolutely love it. And I'm going to explain why. It's easy, it's simple, it's clean, and it works. Okay. But there's a lot we're going to cover here today. So let's get into it. Okay. The product is called the Momo Flip Algo. It's looking at momentum. It's looking at flips in the direction of the trend, and it's using Renko bars. Okay. This system was built for scalpers trading the US market, okay, or the overnight market, but essentially any time that is fast or we have a lot of activity. Okay. And so what we're going to do is we're going to cover a lot. So in order for me to do this, let's cover a couple groundkeeping rules. We are recording it. We'll go over questions at the end of the presentation. We're going to be doing an AMA tomorrow morning, bright and early, for all of the traders that are choosing to use the strategy with us. And we've got a lot to cover today, so let's just get right into that, okay? We will send things out to you at the end of the event, so don't worry if you have to dip out or if you have to leave. You can always watch the recording and always watch for the emails, and all the information will be there tonight and tomorrow morning for you, okay? Now, because we're talking about trading, and because we're looking at automated systems and performance and backtesting and execution, I do need to have a disclaimer. It's required by law. Can everybody here please just look at this, read it, understand it, and take a screenshot? If you accept it, you can stay here. If you don't accept it, you're going to have to leave. Okay. So please type a Y in the chat box if everybody here agrees to the disclaimer so we can move forward like professionals. Fantastic. Great. Now that we've got that out of the way, let's do it. Okay. When I do these presentations, I kind of like to set the tone. And the way that I do that is I just kind of like to call it as it is. Over the years, guys, I've developed myself as an individual. There was a day where we would look at a whole bunch of stuff that, in all fairness, is not relevant. Okay. You know, you can sit down and have a conversation with a bunch of traders and leave feeling like you're no further ahead than you were before you started. Okay. My promise to you today is not that. What I like to do in these events is I like to just shave out the bullshit, get right down to basics, look at things that actually matter, and then everything else can be discussed in user documentation, videos, trading rooms, AMAs, etc. Because we have 1 hour today to go over all of the key things so that you guys can get the most out of this presentation. Okay. We're going to talk about a strategy. I'm going to show you how to use that strategy. We're going to show you the recordings of all the trades that we took using that strategy. Okay. We're going to talk about how to access it, what we're going to do with it. We're going to show you the performance. We're going to just go over everything that actually matters. Because if I was in your seat and I was listening to a presenter talk about this stuff, the last thing I want to hear is a bunch of stuff that I've heard 1,000 times over. Is that fair, guys? You're not going to get bullshit in this presentation. Okay. So if you guys are okay with that, give me a yes. I just want to make sure that we're all on the same page. right? I like to get into the meat. I like to go into the stuff that actually matters, and then everything else can be left for tea leaves and whatever you want to do in the evening. Okay, fantastic. Okay, so the way I like to do things is I like to try to fix the problems. Fixing the problem is not as simple as just, oh, there it is. Everybody has different problems. Okay, but at the end of the day, we all want the same thing. We want to make as much money as possible. Okay. It don't matter if you're new, if you're a veteran and you're still struggling, if you're getting old and you're losing your edge, or if you're just overwhelmed with indicators and charts and webinars and strategy vendors and self-proclaimed gurus or whatever it is. Okay. At the end of the day, the struggle is real. You get up every morning, you turn on your computer, and the only thing that's going through your mind and your emotional makeup is, I got to make money in this market, and it is constantly evolving. Every day is different. Every day is going to be unique. There's going to be similarities. There's going to be overlaps. There's going to be movement. There's going to be buyers. There's going to be sellers. But a lot of traders, what they end up doing is they waste a lot of time. They struggle for a very long period of time, blowing out accounts, failing evals, spending a shitload more money on prop firm accounts, never getting anywhere. I can promise you this, that we have the data. We know the success ratios of most traders. And I'm here to tell you the reality is that traders spend thousands and thousands of dollars and they never get anywhere. Can you guys relate with this? Give me a yes. If you guys feel that you've spent a shitload of money and you still don't feel like you've really moved the needle, just type a yes. I can see all the responses. You're not alone. Okay. So what I want to do today is I want to lead with things that actually matter so that we can reduce that pain point. Okay. I'm not going to sit there and promise you you're going to be the best trader. You're going to cure cancer. You're going to be the next Elon Musk. None of that stuff matters. All I care about is we have a tool set. This tool set can be used for specific reasons, and how to use it is important. That way you can take it and you can implement it. Does that make sense? My job is to drop the amount of money that you're spending on a weekly and monthly basis on shit that doesn't matter, remove as much buyer's remorse as possible, and hopefully cut down on the wasted funds that you don't need to do anymore. Okay. Now, this is an automated webinar. We're going to go over manual and algo trading. We're going to talk about every algo that we build and why it has an algo engine. The algo engine is what we use to make the strategies profitable. Signal generation does not make a strategy profitable. Testing it and defining it and putting in place filters and creating the infrastructure around the strategy is what makes a system work. We're going to talk about the strategy. We're going to go over algo demo. I filmed well, I didn't do it. My team's filmed it. I'm here to press the play button. But at the end of the day, my team has filmed a lot of videos of the strategy trading live. Why? We like to show you as it works, how it moves, what it's doing. I'm going to walk you through those examples. And we've pre-built templates on the only two markets that actually matter, the S&P and the Nasdaq. Why? Because this is a momentum scalping algo. We're talking hundreds of trades in the last month, hundreds, not 10, not 20, not 100, hundreds, because we're looking for lots of activity. We're looking for quick ins and outs, make as much money as possible, use it with trade copiers, and scalp your way to the promised land. Okay. We will be giving you free license. We will be doing a draw. And what's important, okay, how many of you guys over the last while have felt that our pricing is a little expensive? Yes or no? I'm just going to call it as it is. How many of you guys feel that a lot of our strategies, hey, we're going to cover this right now. Okay. I got something really in store for you. We're going to talk about this for a second. Okay. When we build systems, okay, I'm going to explain this so you guys understand this. One is we have an R&D team. Okay. Two, we have a development team. Three, we have a dev management team. Management, you guys get the point. Okay. And then we have an operations team. Okay. In order for us to build all these tools and basically provide it to thousands of traders every year, it costs a lot of money. Okay. The reason it costs a lot of money is we're not building MACDs. Okay. Anybody can piece together an EMA. These are not. These are Ferraris. These are Porsches. These are what you consider top tier products. But because our companies have grown very successfully over the several years, we've now made the decision to drop our pricing because we have a lot more users, which means we can pass those savings back on to you. So I have something fun today, is that we are going to be providing a much better price point for this and things moving forward so that everybody can afford things in a much better fashion. Does that make sense? Give me a yes, that makes sense. I want to make sure that you guys understand that we took a big survey. We polled hundreds and hundreds and hundreds of traders, and we just got the data and we realized that we can help a lot more people by making it a little bit more affordable for everybody. So give me a yes if that makes sense. Hopefully that's well received. I like to get that out of the way now because, hey, like we like to save money. Who doesn't? As long as it doesn't break the bank and we move backwards as an organization, then I can pass those savings on to you guys. Okay. So let you know that we've got some really cool stuff coming at the end of the event. So if you want to save big, you can take advantage. We've got some really cool stuff happening today, and we're going to get into that. Make sense? Okay. So let's kick into it. There's a lot of reasons why someone would want to run automated systems. And rather than read these bullet lists, I like to just talk about data. As a trader, I started trading in maybe like 2013, 2012. I traded through the collapse. I traded through the, I don't know, I've traded through some pretty big market recessions. I think it was like just all I can say is it's been several decades of trading that I've been a trader. And one of the things that I can tell you just from my own experience is that I've learned a lot about what I'm good at and what I'm not good at. Okay. As you become better as a trader, or as you become more experienced, hopefully you will learn what you're good at and what you're not good at. You don't have to be perfect. You don't have to be the best. You just have to be good, and you have to be consistent. The problem is that 90% of the traders that I've ever talked to, or I've ever had the privilege of working with, or having them as a customer, or being a part of our community, they don't really have enough data to be able to make the decisions that give them an edge. They have an edge maybe for a day or for a week, but they don't have a large enough sample size of data to be able to make comforting decisions as a trader. So, what does a comforting decision mean? It means being able to get up and to be able to look yourself in the mirror and say, I know with a very high degree of accuracy that the strategy that I'm using has alpha. And the reason most traders can't answer that properly is because when they're a manual trader, when you're a discretionary trader, you're always winging it to some degree. There's always some level of ambiguity. There's always some levels of, we like to call it circumstances that change on a regular basis, or we call it things that are, I guess you'd say, when you look at a chart, you play tricks on yourself. What you see isn't really what it looks like, right? We call it subjectivity. Subjectivity is probably the best word. Manual traders are very subjective because they might do something today and then tomorrow they do it differently. And maybe they change a little bit. Maybe the management tweaks a little bit, or maybe the way you enter changes. Maybe you miss a trade. There's so many variables that work against manual trading that automation fixes. But the only thing that really, really, really matters outside of efficiency improvements, right? I like to look at these as efficiency, 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 belief. The big B. And you know what? That is more important than efficiency. You want to know why? Because as a trader, you have to believe in what you're doing. If you don't believe in what you're doing, you're either going to blow out accounts, you're going to really, really make yourself work harder than you need to be, you're going to spend a lot of money, or you're going to trade well in one day or 1 week, only to have next week to have really, really different emotions. And so, why do automated traders have more belief in what they're doing? Can anybody answer that? Maybe why would an algo trader or somebody running automation or backtesting have more belief? Brian says data. Brian nailed it. So let's talk about this. Okay. If you want confidence, okay, and you want belief, okay, the only thing that's going to do this is being able to see sample sizes of your trades that work. So if I say, hey, can you show me 200 trades as a discretionary trader? you're going to say, no, because every single one of my trades was slightly different. They all changed. The markets changed. The strategy was tweaked a bit. I did this, I did that, whatever. Every time you change something, every time you did something different, or every time you didn't log your data or actually have a sample size or a broker statement or a prop firm statement or whatever it is that you need to be able to validate what you're doing, you are basically saying, I don't have enough data to prove that I've got a handle on my business as a trader. Okay. An algo trader hits what we call the backtest button, lets it run, determines if a strategy is profitable. If it's not, then they optimize, finds the best parameters, and then trades it forward. Now, let me explain something. There's a big difference between backtesting and optimization. And there's a big difference between optimization and live trading. But let me explain something. If I sat you down right now at the table, I said, listen, do you feel like the last 200 trades were profitable enough for you to believe in what you're doing? And you say, well, I don't have 200 trades of data. Do you have any belief in that? No, you don't. You don't have any belief in some because you don't have any data to back up your belief. But if I sit down and I backtest and I optimize and I have 200 trades and I look over the past 2 months of trading and the market did this versus, I don't know, are you going to put more belief into a strategy that showed you it did this versus gambling over here? There's no promise that the strategy is going to keep going up and to the right. That's called walk forward testing, live forward testing, Monte Carlo simulation, whatever you want to call it. But let me ask you a question, and let's summarize this. If I'm over here and I don't have any data, and I'm over here and I have a strategy that's doing this, where is the belief? You guys tell me, would you be more inclined to want to look at the strategy that has data that shows you there was an edge? Or would you be wanting to put all your money behind the question mark and maybe just put it all on red or black? You tell me. Would you go and buy a business and you have no financials, you have no data, you have no customers, you don't even know what time the business is opening? Or would you go and buy a McDonald's franchise that can show you financial statements that basically makes 5 million net profit every year? Which one would you more likely buy as a business owner? Come on, guys, wake up. I want to know your answers. This is very, very important. This is the reason why most traders don't pay attention to this. McDonald's, you're going to buy the business that has the data to support the reason you're buying it. Exactly. So if I sat there and said, hey, guys, I got this cool idea. I think I got an edge here. I've been looking at this pattern. I got this indicator. Take a look at this. Look at the momentum doing this, blah, 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 blah. And I say, here, just buy it for whatever price. Or if I sit there and I say, guys, listen, we coded a strategy and we spent a month building it, testing it, deploying it, trading it, filming all the videos, watching it trade live. And then here's the data for the strategy. Take a look. What do you think? Which one are you going to be more inclined to look at? The first or the second? Exactly. The data-backed decision. So why do I lead these presentations with this? Because I'm not here to sell you some hocus pocus. I do everything on data. So I'm going to show you the data. We're going to look at the data. We're going to look at the edge. We're going to look at the signals. You can take that data and make a decision for yourself. That's what we call intent, right? Showing you what we intend to be able to believe in because it actually works. We have the evidence it works. We have the data to back it up. Make sense? And that's the difference between a manual trader and a quant. And that's why you see Wall Street and all the big funds and hiring quants because they don't really care about opinion. Okay. So not all strategies are equal. So before I sit there and show you the entry, I want you to understand something. Whenever we build a trading system or a strategy in algos, the entry is 20% of the discussion. 80% of the discussion is the engine. This is what we call the algo engine. Okay, what is this? It's proprietary software that we've built. We're the only ones in the world that have it. It's proprietary to Tickblaze. We've built it for the purpose of creating alpha. It took us 3 years to code this. We built it originally on NinjaTrader, then we brought it over to Tickblaze, and we improved it drastically. So why? Because when we build a signal that we want to execute and trade, we need to determine stop losses, targets, when are we trading it, money management, any filters, any higher time frame filters, any price filters, any momentum filters, et cetera, et cetera, et cetera. We basically take the signal and we run it through a series of testing. Why? Because any monkey can take a signal and make money on a random day. What we want to do is we want to optimize creating the best conditions so that we know that, hey, instead of taking a 2-to-1 target, we should take a 1.2 target. Instead of taking a 6-tick stop, we should be doing an 8-tick stop. Instead of trading at 11 to 12, we should only be trading from 9 till 11, right? You guys understand me? If I'm going to run a strategy or run a business, I want to know how to take the most out of that strategy. And the only way to do that is through the Algo engine. Now, our strategies include this because this is what we do when we build systems. We build it and we use the Algo engine. This is a look under the hood. These are all the features. These are all the things that the strategy engine can do. Now, you do not need to be a rocket scientist to do this. Why? Because we spent the last month pre-building templates for you. What does that mean? That means, yes, we will show you in tomorrow's deep dive training session how to use these settings for this algo. However, most traders can just rely on the strategy templates that we've already built. Why? Because most people are here to try to get to go and trade as fast as possible. We understand that. So our job as a company is always to build the templates, provide the templates so you guys can actually trade using them. And then that way, over time, you can learn how to basically tune the engine. It's kind of like when you buy a Porsche. You open the hood, you say, wow, look at that engine. That's why I paid $185,000 for the car. You close the hood, but really you want to get in it. You want to fricking drive it, right? Because that's where the fun is. This is like lifting the hood of a Porsche, looking under, knowing that the power is in the engine, but really all you care about is being able to drive it and being able to make sure you enjoy it, you get a good experience out of it, and actually makes sense. There's a reason for it. Okay. And so we'll go over all this tomorrow. But what we do is we basically train you on how to make profitable strategies. So what we do every time we do these events, we meet with all the traders that are looking at the strategy, and we teach you how to build and tune your own engine so that even if you don't want to use our templates or our pre-built strategy settings, you can go and build your own. Why? Because maybe you want to use a different market. Maybe you want to test a different time frame. Maybe you want to do things differently. You can do that. But my goal is always this. First, use hours. Why? Because you can be making money as fast as tomorrow. Like literally turn it on, make money. The second is yours. Why? Because traders are going to play with the tools. Traders are always going to spend hours and weeks playing with the tools, taking the time, watching the videos. What we want is we want to focus on making sure you get to making as much money as possible. Literally one winning trade could pay for this algo today, and then everything else is just gravy on the train. Okay. So let's go through this and let's talk about the system and let's get into the actual strategy. Here's a list of all the features. Take a screenshot of it. We're not going to go over a bunch of text. I like to get into the actual strategy. I want to show you the indicators, the charts, and everything. But these are all of the features that actually make this system work. And we're going to go over all that together. So take a yes once you've taken a screenshot of this. I want to make sure you take a screenshot of this, guys. I'm sure everybody has a print screen on their computer or whatever you got to do, your phone, whatever you got to do, just take a screenshot of this. This will all be explained in detail as we go through the next videos and the images, but most of the time tomorrow will be spent doing this with the deep dive training. Okay. Let me know when you guys got it. Type a yes in the chat box. Done. Okay. So this is it. Okay. We're going to get into this. How many of you guys believe simplicity is better? Yes or no? Do you guys want me to provide you an algo with 50 different indicators all doing this so they all have to align under the stars on the top of the pyramid when the moon hits the solar plexus and the freaking falling star hit this? And hell no. Okay. What we want to do here is I want to explain something. When we built this, we were looking to capitalize on a specific condition in the market. Okay. Trends are useless, and I'll explain why. Because there's no trend is the same. Like there is no trend will ever be the same. Everybody thinks that a trend just does this. Yeah. When in theory, it's doing this and holy shit, and it's doing that and like this and right. You guys with me? Everybody wants this, but the markets are actually like this. And that's why trend traders get crushed. Also, there's a big difference between capturing a trade here or having to hold on to a trade to do this. You want to know why? Because a lot of traders can make a lot of money doing this. Most traders lose everything trying to hit the target in a big trend. Large R multiples, yes, they may make you bigger money over time, but the win rates drop drastically, which basically makes most traders completely psychologically screwed up, which means trading is next to impossible for them. Most traders do not have the fortitude to be able to get into a trade here and hold on to large trades like this. Why? Because of trailing drawdowns in prop firms, or just simply because the market doesn't always do that every single day, which means every time you try to get up and run your business, you're hoping for something that may or may not happen today, which is very, very hard, which is why large targets are never the objective for scalping and for prop trading. Okay. What we're doing is what we like to call the ready, set, go. So I want you to just do this. So this is considered ready. Okay. What do we need for this to be ready? Green or red? Okay. So let's just so I write this down. Ready means, am I going long or am I going short? It's as simple as, is it green or is it red? Make sense? How many of you guys can agree with me? When the bottom sub panel, when the momentum oscillator is green, we're looking for longs. When the oscillator has got a momentum red, we're looking for shorts. That means you're ready. Okay. Does that make sense? Green, ready to go long, red, ready to go short. How many of you guys can learn that? Pretty straightforward. Yes. Green means go, red means go, but long or short. Everybody with me? That's ready. Okay. Set is these white lines. Okay. These white lines right here. What are they? Okay. What these are called excursion levels. I'm going to just put EL for excursion levels. Inside of the engine, yeah, it is the VM lean. It is the VM lean, Jason. It is built into the Algo engine. We have what we call excursion levels. And really, when you have an oscillator like this, okay, sometimes you're going to have the market going inside of here, and then they go up, and then they go down, and they go up, and they just go inside. When you're inside of these white lines here, okay, we call this the chop zone. Chop, or there's no movement, there's no momentum, or the market's transitioning. So what we do is ready is red or green. Okay. Set is as soon as we get outside of the chop zone, as soon as this gets outside of here or below here, we are set for a trade. Ready equals red or green. Set equals chop zone. Go equals flip on the EMA. Does that make sense to you? Ready, red or green. Set, chop zone, yes or no. Flipping on an EMA. Does this make sense to you? Ready, set, go. It's that simple. Red, you're looking for shorts. Are we out of the chop zone? Great. Pull back to an EMA, give me a flip, take a trade. The difference is we're only looking for base hits with momentum. I am not looking for trend. I am looking for base hits. As you can see, this is a base hit. This is a base hit. This is a base hit. Why did we not take a trade there? The pullback was too deep. The flip happened inside the chop zone. Why did this not take a trade here? Because we're in chop. Chop. Not good. We are not using an RSI. This is VM. This is a velocity momentum oscillator. It is a VM lean. We call this VML. It is our own proprietary oscillator. It actually involves 3 different oscillators that comprise of the histogram. And then we have standard deviation bands on the basic momentum, which basically allows us to capitalize on, because the chop zone will be different on the ES than it would be on the Nasdaq, would be on crude. It's not, they're not all normalized scales. So this is very important that you understand this. so that when you use the VM lean, it's auto-adaptive to the market's volatility. Make sense, guys? I just want you to understand. Did everybody understand? Ready, set, go. It's very critical. Okay. Pretty straightforward. Yes. Here's another example. Ready, set, go. Look at all of this in here. You see all this? No trades. No trade zone. We stay out. As soon as the market picked up speed on this push, we got enough momentum to come out of the chop zone. We pulled back and we prime it for a momentum. Could you have taken a bigger target? Sure. That's not the objective. We are looking for base hits. Base hits. Why? Because we're not trying to do this. We're trying to do this. Make sense? Ready, set, go. RSG, baby. Let's continue. Here's another example. Okay. This is what the strategy looks like. It will only take trades when all three criteria are met. When you are basically red or green, when you're outside of the chop zone, when you're looking at the EMA. Okay. We optimize the chop zone. So this is very, very important. Every time we test, we're optimizing the chop zone because this zone will be different each market. So we're optimizing the chop zone. We're also optimizing the EMA. It's not the same on every market. What's good on the Nasdaq or gold will be different than what's good on the S&P. It changes per each market. So it's not one setting. This oscillator is very different from each market to market. The size of the scale is very different. If you go back to this image, if you go back to this picture, look at the scale. Okay, let's go back here. Take a look at the scale. It's like 2 to like negative 1.3. And then you look at the Nasdaq, and you're looking at it's from 30 to negative 30. They're very different oscillator scales. Okay, so this is very important. Okay, now let's take a look here. These are really, really clean trades, by the way, and you're not going to take trades in the noise. Here's a great example of it on the S&P. The S&P is a great scalper. Why? Because you're just riding the momentum of each impulse leg. The whole point of this is you don't really care about the trends. You're catching the momentum. As a day trader, you don't have to be right about the trend. You don't have to be right about, is the market going to give me this pullback, that pullback? All that matters is that you jump on the freight train and you capture a little bit of a move every time the freight train picks up steam. Why? Because it doesn't matter if we're going to be overbought or oversold. You're capturing the meat in the middle of every single move. That is what momentum trading is. And what's nice is that you're always on the right side of the market. Why? Because you're moving with it. You're scalping. If you're a trend trader, this is a different, this is not trend trading. This is momentum movement. Does this make sense? Type a yes in the chat box. This makes sense to you. Here's another example. Here's me running this on the ES. Some really, 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 really great trading, guys. I'm here to tell you that you can capture a lot of trades. So here's the thing. This type of trading can produce hundreds of trades. So we block a lot of trades because we don't want to be trading during certain times. We don't want to be trading during certain wrong sessions. Like the key here is to know that because there's so many trades, we really put in the right filters to be able to only be trading during the right times. I'm going to show you how this performed over the last several weeks on these markets, because if you were trading this strategy over the last 4 or 5 weeks, we can show you exactly what type of profitability we had, and then you can decide if this is, something you want to look to use. Okay. So here's another example. Clean entries, clean entries. Here's another example. Yeah, this was a really great test I did on gold. This was a super, gold moves, man. And when gold moves, it's got a lot of momentum, right? And you'll notice that the chop zone here was really big, right? Well, that's what this strategy told us to set it at, right? Could you have traded in here? Sure, but look at the freaking sideways market, right? No point. No point. Okay, so you're going to see only taking trades when we're outside of the right conditions. You're riding the momentum in moving markets. We're avoiding, okay, this is, if anybody in here, Donald says, my biggest problem is I've always been trading in the chop. This is exactly, well, momentum's not about chop. If you're trading in chop, you're not on the right side of the market. You're not aware of it, right? And that's not your fault. It's just the market's going to do what it does, and you never know when it's going to do that. You never know when the market's just going to go bam, pick up speed, right? That's why an algo can execute on the conditions. Okay. So let's go in here. So you guys want to watch some videos of us trading this? So what we did was we just turned on the camera. Why? Because we like to run it forward. We like to run strategies in live markets. Backtesting is just one side of the equation. We like to run them forward. What does that mean? We turn an algo on and we press record and we film it, and then we watch the strategy live trading and executing. Okay. So what I'm going to do, I'm going to turn on the audio of my computer. Okay. And we're going to play some videos. Now I've got a lot of videos, so we're going to walk you through it. Okay. Let me know when you can see it. So what is the background color? What is the background color? Green. What does that mean? Ready? We're going long, right? Right? I think we had the excursion lines turned off on this video. There would not be an execution without a white line there. Boom. Do you see how quick it pushed to a target? There, I think Jeff just had the white line not turned on here, but it would never have taken a trade without the excursion line being in the right spot. It literally flipped, gave the entry. You're out within 3 bars. Like literally within 1 minute. This trade is over. 1207 to 1208. That's a 1 minute trade. Yeah. Yeah, we don't have any target filled. No, the templates, Deborah, are already set for you. You don't have to set the targets. These are already pre-configured in our templates. Yeah. Okay, these are already pre-configured. Let me show you another example. Stops and targets are already based on the optimized templates, Leonard. We're going to go over that in a second. Yeah. Here's another example, okay? So let me just, before I even hit the play button, where are we going long or short right now? I'm going to teach you how to trade this before you even use it. Are we going long or short? Ready is what? Why? I'm going to train your brain before you use it. It's important. Ready, set, short. Yes. Ready, set, short. Set. Are we outside of the white chop zone? Yes or no? Ready, set, yes. All we need is a flip on an EMA. We can take a short. Take a look. As soon as that EMA flips down, we're going to take a short. Boom. Ready, pushing down. Out of the momentum chop zone. Here was the ready. Ready to go short. Set. We are in the right conditions. Pull back to an EMA, flip. What happens if it just did this? Push, right? Catching a target on a momentum trade before anything happens, it don't matter. All we care about is catching a little bit of a base hit, because momentum is not about direction. Momentum is about force. There's a big difference. Don't confuse direction for force. Okay. Very, very, very important. Do not confuse direction for speed or velocity of the market. Okay. That's something that has taken me years to master. Don't get that twisted. Let me pause that. Okay. Let's just run the time here. The entry was at here and the exit was here. We're talking maybe 3 minutes being in that trade. Like these are scalps, guys. These are like 3 minutes or less. These trades are not meant to be in the market. It exits based off of targets, Deborah. Great question. So let me explain this. Low time in the market, Jeff. Absolutely. Let me explain a few things. A lot of questions is, how do I know how big my stop loss should be? How do I know how big my target should be? Optimization. We spent a month optimizing templates on the ES and the NQ. Why? Because that's the exact question. That's the whole point of the algo engine. We set ready, set, go is the signal. And then what we do is we test it on different times. We test it on different markets. We test it on different bar types. We test it on the stops and the targets, etc. Okay. And so all of this has to do with just the algo engine and the testing. Okay. Does that make sense? Here's another example. Okay. We are ready. Red background going for shorts. There's the short. Okay. We just had the excursion levels turned off in some of these videos just for the purpose of seeing it. Look how fast these trades happen. This is the whole point. You take in the short, you're out from literally 2250 to 2350. That's a 1 minute trade. You're in the market for 1 minute. You can make a lot of money in 1 minute when you're on the right side of force. It's like gravity. You drop a ball, you drop the ball. It's going to drop quickly because of the laws of gravity. Same thing. This is what we call momentum. Momentum trading is like the laws of gravity. No matter what you're going to do, if you're on the right side of momentum, you're most likely going to get what we call force. And as long as you're on the right side of force, you only need a few bars to be able to capture big profits. And that's the whole point of scalping momentum. Okay. Let's continue. Let's take another trade. Here's another example. Okay. Ready? Red bars, red background. Boom. Okay. As soon as this moves far enough out of the chop zone may or may not be turned on this video, right? But it's all built into the algo. And all you got to do is wait for the flip. And let's look at the timestamps. Boom. Let's wait for the timestamp. 7:52. You're on the right side of force. Okay, let's pause it. Let's talk about that for a second. Let's just pause this again. So let's take a look at that timestamp. Entry is at 7:52. We're out before 45 seconds. You're on the right side of force. Momentum scalping. Okay, this is the whole point, guys. That's why you get a lot of trades. Okay, let's take a look at this one. Ready, green to the upside. Set means the oscillator is pushed outside the chop zone. Okay. Not how, but when to place it. I still understand how you know when to take profit. By the algo, the automated system has optimized templates. We've tested it over months and months of data, and we've tested tight stops and targets, medium stops and targets, long stops and targets, etc. Okay. Yeah, the chop zone is a visualization, so you can turn it on or off. It's just a setting if you want to see it or not. It's all built inside of the algo, so it'll look at the scale, it'll look at the oscillator if it's going like this or if it's going like this, and it'll automatically determine where the chop zone is. So it will not take trades if you're in the chop zone. You can turn it on. Okay, you can turn it on or off. It's just a visualization cube. It's all built into the system. So here's an example. Ready, we're green. As long as momentum is outside of the chop zone, it will take that trade. And as long as you're on the right side of force, you will take a target with a very high degree of accuracy. Why? You're on the right side of momentum. You're on the right side of the force. The force is strong. You know, they say Darth Vader. Let's pause that. Look at the timestamp. Literally a minute trade. These are not day trades. These are scalps. These are scalps. This is a scalping webinar. This is for prop firm scalping. This is for quick base hits all day long. You could literally be done trading every single market open in a very short period of time. Okay, let's continue on. Here's a great example. Okay, this is clearly outside of the chop zone. If you turn the visuals on, it's almost going to be like right here and right here. Yeah. Take a look at this. Push. Okay. Same thing here. Push down, pull back. We are out of the chop zone. As long as we're out of the chop zone, we get a Renko flip. It's going to take a short here. Okay. Just give me a second. Take a look at this. Just press play. I just like to film the videos, guys. This is us filming it trading. We've tested a bunch of markets, Deborah. We have templates built for the S&P and the Nasdaq. Just why? Because they're the primary markets 90% of most day traders are trading. But we will go over more markets. Yeah. Let's take a look at the time. Okay, let's take a look at that. Just kind of let it run. Let's look at the timestamp. I just want to look at how long these trades take. Okay, let's take a look at that. So we took the trade literally here, less than a minute. You're out in less than a minute. Like your emotions are at a minimized factor at that point, just due to the fact you're on the right side of the market. Okay. And you have three things on your side. You have direction, which is the green or red. So you have direction plus force plus EMA plus price. Why? You can't be taking longs when the market's going down. You can't be taking shorts when the market's going up. That's direction. That's the red and the green. Force is you have to be on the right side of momentum. You need to be on a freight train that is still moving. That is force. Direction plus force. Okay. EMA is location. It has nothing to do with trend. EMA is about location. And the flip trade is about price. You want to see the market rotate at the right location. That is all what we're talking about here. Okay, this is important. Okay, very, very important. Tickblaze is free, Gavin. You don't have to worry about it. It's NinjaTrader on steroids. Way, way better platform than any of the other tech stacks out there. Yeah, I know this because we've been building on those tech stacks for like 10, 15 years. Yeah. So let me go over this, guys. Everybody understand this? Clean scalps. Okay, here's a great example. Okay. Force, direction, we're green, looking for longs. We're clearly outside of the chop zone. We're outside of the white levels. What does that mean? When we pull back to an EMA, that is location. We get the price rotation, that is price. Okay, let's take a look. Let's just watch how fast these trades happen because they happen very quickly. You're in, you're on the right side of the force. Okay, you're literally outside of the chop zone. You're just riding a freight train. All you're doing in this, you're just getting on a freight train. That's all this strategy is designed to do is you're just riding the market in movement. You're not trying to pick tops and bottoms. You're not trying to predict the trend. You don't really care if it just keeps going. All that matters is that you're in the right place at the right time for the right reasons. Does this make sense, guys? Simplicity is key. You can trade this manually. All of our algos can be turned off for automated execution. So what that means is that you do not have to run this, okay? You do not have to run this as an algo. All of our algos have a disengage button, so you can turn it off and you can just run it as a signal and just turn it on and you can take the trades, okay? Makes sense? Let's just keep going. We're going to film more videos. Like this is just going to keep filming. Here's another example, okay? Take a look at the chop zone. This chop zone is very large here. Very large. Why? Because that's what the settings meant for this market in this time frame. So let's go through this. Let's take a look at this. The market just got out of the chop zone. We just turned to red. Ready means short, red background. Set means as long as we get outside of the chop zone and we flip on that EMA, there's going to be a short. Boom. And as soon as that market gives me force, okay, if I'm on the right side of that force, it should give me a very quick target. You know what's really cool? What's really cool about this is that if it doesn't work, it wasn't supposed to work. Stop outs happen quick because you're on the wrong side of the market. If for whatever reason it takes a trade and it takes a stop, the force was not there. It wasn't enough force. So what's really, really cool about momentum scalping is that you don't. Let me back this up. One of the worst things that I hate as a trader is if I'm in a trade and it just fucking dances. It just sits there going up and down and up and down. And you're sitting there like, come on, am I going to hit my stop? Am I going to hit my target? Am I going to hit my stop? Am I going to hit my target? How many of you guys have played that dance before? I do not like that. It drives me nuts. You can sense the passion in my voice when I say this because I'm actually a trader. So when I'm trading, I don't like being in the market. I don't like being in the market. If the market's not moving, I don't want to be in it. Why? Because if the market ain't moving, I have a harder time moving to a stop or a target, period. It don't matter what strategy you're trading. If you get into a trade and it just sits there and it dances around, does nothing, and just laughs at you, okay? What that means is that the market is dead. What's really cool about this type of trading system is that you're in it, and if it moves, it's going to move very quickly. If not, it's going to hit your stop very quickly. Why? Because it's designed to do that. Make sense, guys? And sorry if I cussed on the mark. I get so passionate about this stuff because I just see how well these entries work. And I know that it really speaks to a certain type of trader that struggles with emotions. It struggles with being in the market. They struggle with just being on the right side of the market. These types of trading systems can fix that problem drastically for you. Okay. Right. I'll tone it down a little bit. You guys get it. Here's a great example. Another one. I can just keep showing you these all day long. We filmed, I think, over like 30 trades live. Let's keep going. Ready? We're looking for shorts. Outside of the chop zone. Can't tell because we have it turned off, but it's automatically built into the signal logic, so it doesn't matter. You don't have to have it on. A lot of people like seeing it, so you can turn it on. Okay. It should just come in real quick, take this trade, move quickly. It'll move quickly if it's going to hit the target. Boom. Real quick, in and out, less than 1 minute. It's meant for Renkos, Rob, but you could use range if you want. It's meant for Renkos for the purpose of clean, smooth price action. Okay. Here's another example. Look at the chop zone. Boom. Chop zone out of the market, pulls back. This is a pullback in a trend, but it's out of the chop zone. Make sense? You'll be on the right side of the market. You're on the right side of force. Boom. Look at the timestamp. That was actually a little longer. I was like, what? We got in at like 56. We got out at like 59. That was like 3 minutes. I don't see these trades lasting for more than 2 to 3 minutes on the long ones. Like that's still a very, very short time for a day trader. 3 minutes, like, right? Yeah, we're going to go over that next, Garrett. I just like to show examples. I think a lot of traders like to see examples. We're going to go over the performance, how well it performed over the last 100, 300 trades. We're going to get into that. Okay. Take a look. Green is we're looking for longs. We just took a flip on the zone. Momentum and direction is on our side. Location is on our side. Force is on our side. Boom. Look how fast. Momentum is not meant to stay stagnant. Get in at 1150. Get out at 1154, 1155, 51. So it's like 3 minutes. Like I said, the long trades we ever see are around 3 minutes. The average trade duration is less than a minute. All right. Did you guys enjoy that? Type a yes if you found that informative. I just like to be able to play real trading for you guys because I can't control the market. So what we do is we film live trading and we show you real trading because that's the only way I can actually show you examples over a lot of examples without I don't have a crystal ball. I can't say, hey Sean, go move the market right now, right? That's why we film live trading. Okay. So what we're going to do right now is while I'm doing the demo, I'm going to give away free software. We always do this. You can trade on any market, Bruce. This can be used on stocks, futures, Forex, crypto, as long as you test it. We have not tested it on other asset classes, but we can go over that tomorrow in the AMA when we do training, and we can always look at other markets and show you how to set it up. So, Peter, you here, brother? What we're going to do is we're going to give away a free license while I'm doing a demo. While I'm doing a demo, I'm going to get Pete to put a link in the chat box. And then what we're going to do is we're going to basically essentially just give a lucky license away to someone who's got lady luck on their side. So while I'm going through this demo, can everybody, yeah, I would never use MT5, Marcus. No offense, but it's a 1980s technology that is built for the ice stone age. It can't do what we do in the algo side of things. Yeah, you can't build these types of tools on there. Yeah, makes sense. So let's go through this. Okay, what we're going to do is I want to show you this. So let's go in and just take a look at performance for a second. So this is a portfolio, and these are weeks, not days. These are weeks. So we ran this over the last month. Okay. Okay. We ran this over a month. Okay. We could go a lot longer, but this is 300 trades. So this is 300 trades. Let's just go back over this. 300. Okay. Huge sample size. 1 month of trading, 300 trades. Okay. The average time in the market is less than a minute. Okay. Does this make sense? Hit rate. Okay. The hit rate on this, okay, is about 70% across 330 trades. That's a lot, guys. So let me explain something. Normally, what you want to look at is you want to look at sample sizes of 100 trades or more, right? You're getting this on average in a week. That's a lot. Now that's over 2 markets, but still 50 trades a week on the S&P. That's a lot of trades, guys. So what I'm trying to tell you is that as a scalper, okay, as a scalper, well, you could trade micro minis. You're not trading big stops and targets, so you don't need to use micros. Your commissions will be less. Now let's go over this for a second. Okay, let's go into the graphs. Let's take a look at this. I'm going to look at the Nasdaq first. Okay. There it was. So this was the Nasdaq. Okay. So on average, I think Jeff, I don't know if Jeff is here. I think Jeff is here, but I think we're risking about $500 per trade. I think that's what we're doing. Risking about $500 a trade. Okay. And you're going to see here, this was 1, 2, 3, 4, 5 weeks of trading. Okay. This is very, very solid, right? Risking $500 a trade, right? Yeah, it's a static 5 lot. Jeff says, yeah, it's about 5 lots. Stops and targets are quite small. But in 5 weeks, right, that produced this, okay? And so if we look at let's go over to the S&P here now. This was the S&P. This was originally built for the S&P. It wasn't built for any other markets. Why? Because we want to be able to get in with a lot of size in a quick period of time, and the S&P allows you to do that. Now you can trade this on gold and on the Russell and on the Nasdaq and everything, but it is really, really, really dialed in on the S&P. Okay. Does that make sense, guys? I want to show you the S&P. Let's go over here to this is the Nasdaq. Okay, so this is the Nasdaq. This is a great example of the Nasdaq taking trades. Let's go over here into this. This is a great example of the S&P. And the S&P is going to get in, it's going to get in quick, and it's going to get in and move, okay? And you're going to see, right, like you could be on, and I left this on for an example, okay? If you think about this, we took a long here, green background, out of the chop zone, on the right side of the EMA. But technically, you're going against the big picture trend, are you not? Take a look at this. As a momentum trader, you don't need to be on the right side of trend all the time. This is the difference between alignment and catching force. You can see these are actually counter trend momentum trades. And if you look at when the momentum, look how fast the momentum happens when you're on the right side of trend. Big EMAs are down. The strategy is going to pop, and it's going to pop super fast. Okay. And so no, the EMAs are not the same for every market. That's the whole point of optimizations. Yeah. That's the whole point of optimizations. So when you look at the direction, right, and if you really want to dial this in, right, direction means nothing, right? All that matters to us is that we're on the right side of the force and the right side of the EMA flips. All this is getting on a freight train. Like if you're on a train and the train station is here and there's a bus stop here and a bus stop there and a bus stop there and a bus stop here, but the trains just keep going, you're basically just getting on the train. And you don't really care where it stops because you're only in it. Like, look, this market you could have taken a lot more out of the trade, but the strategy is designed to do this and do that very effectively. Why? Because a lot of traders, as a manual discretionary trader, they see this, they say, wow, that was a good short. Wow, look at the leg. And they're like, I'm going to take that. But if you were doing it here and you were doing that exact same approach and you had a target down here, you got smoked on a stop run right there. And this is the difference between experience. You say, wow, I got a trade. Wow, look at that run. I could, yeah, okay. You do that there. But if you did that here and your target's way down here, you got stopped out right here again. So as a momentum trader, we don't really care about big targets. We care about alignment. What does alignment mean? Alignment means we're on the right side of the market, ready. We're on the right side of the chop zone, set. We're on the right side of location, go. Does that make sense? Ready, set, go, baby. Write it down. Get it tattooed on your arm. Do whatever you need to do. Flashcards on your computer. Because what will happen is that a lot of traders will start to gravitate to the simplicity of what the strategy is designed to do. Does that make sense, guys? I know it's a lot. We're trying to get through this in a very fast time because I'm trying to be cognizant of your time. It's a lot to take in. Do we have a winner here? Winner, chicken dinner, Pete? Who won?
Winner. Shannon Diggs. I'll pop it in the chat.
Jeez. Shannon Diggs, you on fire, my friend. You're moving and a grooving. Lady Luck is on your side. Everybody give Shannon a round of applause. Type a Y in the chat box if you're happy for that person's success. I'm a big believer of awarding everybody. Everybody deserves to win at some point in their life. Even if you didn't win today, that doesn't mean you're not giving everybody good vibes, right? Pay it forward. Fantastic. So make sure you check your email, or you can email in. We'll give you a free license. Are you here? Let me see. Are you here, Shannon? Got to be here to win. Got to be here to win. Hopefully. Okay, Shannon Diggs, you're the winner. Congrats. Hopefully you enjoyed the presentation. Okay, so does everybody understand that? There's a lot to be discussed. We discussed a lot, okay? We discussed a lot. Now, when we set the strategy up, tomorrow what we're going to do is what's really cool about Tickblaze is how fast and easy it is for us to load these strategies. So all we do is we're going to teach you tomorrow how to turn the strategy on. We're going to teach you how to load it. We're going to teach you how to deploy it. We're going to teach you how to trade it. We're going to teach you how to back test it. We're going to teach you how to optimize it. And we're going to teach you how to trade it. Okay. Makes sense? Perfect. So let's go back into the PowerPoint, guys. Let's do this here. Let's just make sure we're here in it to win it. Let's switch this over. And let's change that out. I need to pull that up. Give me a second, guys. Let's pull this up. I'm going to find that. I'm going to bring it back here, guys. 1 second. Display settings, swap that percenter. Can everybody see the screen here, guys? Fantastic. So tomorrow, what we're going to be doing is we're going to be doing a deep dive session. But before we do that, what I like to do is I like to go over pricing. Now, how many of you guys heard me at the beginning saying we've dropped our pricing? I know everybody's going to hold me accountable to that. So I just want you guys remember me saying that? How many of you guys are with me on that? Okay, great. Fantastic. Screen is black? Shit. All right, hold on a second. Give me a second, guys. Give me a second. Zoom is trying to challenge my patience, but that's okay. It will never beat me. It will never beat me. Are you guys with me here? How many of you guys with me? How's that? Is that better? Back on track? Zoom will never get the best of me. I can promise you that. Okay, so let's do this. I'd like to go over pricing. I'd like to talk about the discount, everything that's included. I really want to go over that. Shannon's good with price, she says. Shannon's, I'm good with the price. Huh? Yes, you are. Yes, you are. Touche. First of all, before we go in, yeah, I know there's a little bit of a black box on this one. Right? I just can't get rid of that zoom annotation. It's killing me. Killing my flex, Joe. Yeah. Is that better? Can everybody see that now? Now, before I go any, yeah, I can't get rid of it. It's zoom. Black, is it a big black box or a small black box? It's a small. Some people say big, some people say box. It's a third of the screen. Jesus. Okay, give me a second, guys. Give me a second. Let me try this. Bear with me, guys. How about now? Is that better? It's good? Okay, good. Thank you. Appreciate it. Zoom, it did not get the best of us. Now, before I go into pricing, did you guys enjoy the presentation? Just type a yes if you enjoyed the presentation. You can relate with the conversation. You can relate with the mentality around the strategy, the way that the system was built, what it's designed to do. Yeah. Yeah, it still says free license because I'm just checking to make sure that I did my job as an instructor. I like to teach, I like to educate, I like to kind of relate with traders. Okay. Because I've ran rooms and live streams and traded for years, right? As a system designer, I like to be able to get in the seat of the traders to be able to make sure that I can speak the same language as you, right? Because I have a lot of experience with that. Okay. So do you guys understand that? Okay. Don't worry, Todd. We do a lot of these events. Joining my team and everybody that's built the tools and knows everything about algo trading, you need to buy the software today. Why? Because you got to get the emails, the links, the private VIP training Zoom, everything is going to be sent to you. So obviously you have literally till tonight to be able to purchase so that you can show up tomorrow very, very early and join a bunch of experienced traders and be able to do that. Does that make sense? Give me a yes if that makes sense. Okay. Pete, if you could just keep placing the link in the chat box just periodically so everybody has it. Click the link in the chat box, guys. Please note this, that Tickblaze is free. So anybody here that's using NinjaTrader or TradingView or Quant Tower or MetaTrader, we do not sell the platform to retail traders. We are an app store in the back end of the platform. Our primary business is prop firms and brokers. So ultimately what we do is we provide value to the retail public. So if you are here and you are not using Tickblaze, it just keeps getting better for the people. Why? Because Tickblaze is free. So you don't have to go and buy the platform. You don't have to worry about that. And we ultimately connect to every data provider and broker in the industry and all the prop firms. So you're all set. Okay. Yeah, you can have it actually on your desktop and also your laptop. Yeah. My team thanks you. Thank you for being here. And as always, if you have any questions, my team is an email and a phone call away. Remember, ready, set, go. The power is in your hands. Okay. Join us tomorrow and you'll be able to do this and build it on all of the other strategies and markets that we can teach you how to do. Okay, guys. So we'll make sure we get in touch with everybody that's requesting callbacks and have a fantastic evening. Take care.